Hello there, folks. It's Justin Nielsen here, and welcome to another episode of the SwingTrader Status Update. I'm back from Costa Rica, so I hope you were in good hands while Mike and Chris were coming at you. Speaking of Mike, of course, Mike Webster is going to be joining me here for this episode. How you doing, Mike?
Good. We missed you while you were gone, but I'm so happy you got such a nice vacation down there.
It was very nice. So, yeah, we were in the Playa Hermosa area. Very, very nice area. Great location, and quite a bit of rain, a lot more than I'm used to in the California area. I think we got
that is the annual rainforest, right?
It is a rainforest. Yeah, we got the annual rainfall that we usually see, in basically our week's vacation. But yeah, let's get right into it, because I think the biggest thing that we have to talk about right now is this potential two things: the potential pullback that we are seeing in the market, and especially with market leader Nvidia. I'm going to go ahead and, just real quickly kind of point out this downside reversal that kind of happened right as we were approaching 18,000. Of course, on Nvidia, it looked a lot more pronounced. That Thursday's action, I think that's kind of the change since we've been chatting with folks last. Now, we'll have to also talk about the bounce today, what that means for Nvidia. Is it too soon? And also, let's talk about the rotation. So, Mike, go. It's your turn.
Okay. So what we saw with Nvidia was really, we saw that across the tech space. It was just magnified with Nvidia, which I have a position in. I think,
and I still have a small position in, much, much smaller. I was over 25% in my account previously.
Yeah, so I think a lot of people probably reduced some of it over this last week, but this is normal action with a leading stock, which we call this a model book stock, a stock that's had such a huge move. Let's go out to the weekly for a second just to get a sense for the type of move that this one has had. So when you're up there like that, you want these healthy pullbacks, and especially even on a weekly. If we close the week right here, that would look normal and ideal action. I know it's come way off its highs, but it's, and it bounced a little bit today. But this is normal. So 10% off its highs after, let's go back to the daily to kind of see, yesterday at the lows, it was more like, I don't know, maybe 16%.
Yeah, 16%, I think, something like that. Mm-hmm.
Yeah, and that's normal.
In 3 days, that hurts, right?
It hurts, but I look at it as healthy rotation that needed to happen, because you were starting to get people giddy. Like I was starting to see that around, just anecdotally, of just people just getting a little bit carried away with their Nvidia positions or their chips in general, because they've been going straight up. And so that's human nature to get a little giddy. So we were on guard with that. We did take the QLD off and the SMH off while they were still near their highs, kind of anticipating that this was going to happen, because that is what normally does happen. And we were trying to rotate into other places. We haven't been getting the traction that we really want there, but a lot of things look set up. But we did exit out of the SMH and the QLDs last week, pretty much assuming that this was going to happen, because we were just in a position where things were stretched and they needed to pull back in. And you can see that the SMH found support right at its 21-day, which is that green line. We always say when things are extended, we want to pull back to the 21-day line. And then when it comes in, no one ever really wants it there. So I think this is healthy, but what do we do at this point? Let's go back to Nvidia. I'm trying to find a way for us to get Nvidia back on the list, on the SwingTrader list, but we want a good risk reward situation. And I don't think that is today. You could certainly, I added to a little bit of my position today because I'd really brought it down to a tiny position, but I just added incrementally because I think we need some time in here. And I think that time is probably going to be measured in days and weeks, not weeks to months for Nvidia. But we can't tell the market what to do. We're just looking for prior historical examples that look like this to kind of get a roadmap. But for me at this point, this still looks normal. would it be normal to have a flat base here? Yes. Would it be normal to form a cup? And this is the beginning of the left side of a cup? Absolutely. I think your guardrail is that 50-day, which is your red line, which is just above 100. So if we get down that far and go under it in any material way, then I think it would be a little bit overdone, and I would be more concerned for their overall market. But at this point, the rotation seems nice and healthy. Let's take a look at SPY for a sec. And this one is also pulled back in. We're really wanting to get the spiders back on SwingTrader once we get a good setup. We're hoping for maybe a nice upside reversal. So that would happen if we had a weekday down to the 21-day, which is that green line there, and then turned back up like we did today. That would be a place where we'd probably either put the SPY back on, or we'd put the SSO, which is the leverage version, the 2x leverage
2x
version of SPY. Same thing with QLD. We're just waiting, for a good entry point there as well to get that back on. But in the meantime, we're still fully invested, and we've spread out into some different areas. Do you want to pull up the pie chart and kind of show where we currently are exposed?
Yeah, let's do it.
All right. So I can't see it on my end, so you let me know when it's up.
It's up. So this is where, if you go on the right-hand side above the chat and you do the view broadcast.
Oh, there we go. Got it now.
Yeah. So,
okay.
But you probably can't read it because it's small. So
Yes.
I'll go ahead and read some of the areas off for you. The biggest areas, software at 21.8%. We've got medical at 22.3%. Retail is up there at 14.6%, and internet at 19.7%. Then we've got a lot of these small little slices, and that's kind of distributed between banks, financial, consumer, telecom, aerospace, energy, leisure. That's kind of how things are spread out, and a lot of quarter positions. So explain a little bit about why you're starting with quarter positions here.
Yeah, so I've always liked casting a wide net, seeing what sticks, and then adding to it. So I know that translates into a lot of alerts to people. We're putting this on, and we're taking it off, putting it on, taking it off. And I know that can be frustrating, but frankly, I'm trading even more active than that. Not, intentionally, but you just cast a wide net, and then you see what sticks. Bill O'Neill would do the same thing, but to a much less degree than the way I do it. But it was still, he would buy 5 to 8 stocks and then kick out the ones that weren't working and add to the ones that are. And that's what the intent of SwingTrader is. That same thing is just, as things are working, we're going to be adding to them. As they're not, we're going to be backing away. The quarter positions are allowing us to let them wiggle and wobble a little bit more than we had been before, because I was frankly being probably a little bit too tight for an external product like SwingTrader. In my own account, if I'm down on something at the end of the day, lots of times I'll just blow it out, and if it sets back up the next day, I'll buy it back. And I know a lot of people aren't comfortable with that, so we're trying to slow things down a little bit here. But casting that wide net is the style that I like to do. And right now, let's go to a couple of the ones that we've been moving into. Let's take a look at Meta and Microsoft and Google.
But before we do that, I just want to, before we move on from the market area, I want to do one more show here of RSP, because I thought it was interesting that the equal weighted S&P 500, these last few days that were so, ugly kind of looking for the market indexes, RSP was holding up well. There were more advancers than decliners. And the RSP, of course, is the Invesco equal weighted S&P 500. And then, of course, today, when the NASDAQ was up strongly, RSP down. Advancers, undermined by the decliners. I also thought maybe this would be a good time for you to show your regression line while we're kind of, before we move on to individual stocks.
That's a great idea. So you let me know when you can see.
Yep. It's up.
Okay. we're going to take a look at SPY first. And this is something that we talked about on our Friday SMTs that I do with Ali. And this is just a regression line, which is just a fancy way for saying a line of best fit from 2 points. So from here to here, and it's looking at all the data points in between and just drawing a line of best fit. I typically just use a 1 standard deviation, which is your top line and your bottom line. But because that was getting a little bit too wide, I've changed it and I've included a 0.75 standard deviation. So what does that mean? That just means your white line is your line of best fit, starting at April 22nd, going through to today. So still less than 50 days. Once it's 50 days, we'll just kind of lock this in place and say that's the trend that we're dealing with. And then when you get to the top part of it, as you did over here in early or mid May, that's when you're expecting things to kind of pull back in. And then when you get to the low part of it, as you did on the end of May, that's when you're expecting a bounce.
Now, it's important to mention this is when you're trending, right?
When you're trending, yes.
Yes.
So thank you. Very good point. So we look at this to make sure that we are still trending. So our default is thinking that you're going to hug back to the white line, which is this regression line here. And that's pretty much what we've been doing. We got a little bit above it, now came back a little bit below it, and looks like it wants to go back up there like a magnet. But we have our guardrails in place. Guardrail on the top at the 0.75 up here. So that would put us right around like 559 and change. And then on the downside, that would put us right around the 21-day moving average, just a little bit below that. So right around 437 or so. So as long as we stay within that over the next week, then everything is acting normal. That's why we use these regressions, to see what's normal and what's abnormal. So let's look at the
and it can be useful for kind of letting you know when you're extended, kind of, again, getting a little bit out of range, which doesn't look like SPY really did in this case.
It didn't. SPY really didn't get hot at all. It was just a little bit hot, but it was more that the Qs were getting hot. You can see the Qs were getting really close to that red line. And that was telling us, that's why we were taking off the QLD and the SMH, is because we were saying, okay, we're getting towards the top of the regression. This doesn't mean it's going to turn away and come down, but that would be normal. And that is indeed what happened. So here are the Qs, again, using the 1 standard deviation and the 0.75 standard deviations from this regression. And again, on the downside, you're looking at just underneath the 21-day. So for the Qs around 467 and change, kind of 468, that area. And on the top end, you're looking at like 499 or so. And there's nothing magical about these. It's just a way of looking at the trend and making sure that you're not too far out of it on the top side or on the bottom side of it. And as it comes in, if it continues to come in, it gets close to the regression line down, or the minus 0.75 standard deviations, which would basically put you down by the 21-day. If we had an upside reversal there, that's where we would gun it really hard in this department. But right now, it's still acting normal. So I know there's all the talk about the pullback and everything, but when you look at it in this way, it just looks normal and just as part of this trend.
Great. So let's go ahead, and you wanted to look at a few stocks.
Yeah.
Anything kind of come to your mind?
Let's look at Google, for example.
Okay.
Because I think when you're looking at the mega caps, what's been happening is, I think some money was coming out of Nvidia and the rest of the chips, the Broadcoms and so on, and then it was going somewhere else. And lately, for the last couple years, the market has really gravitated towards the mega caps. So that's where the money is flowing back in, even though we'd like it to go to RSP, meaning the equal weights, and stay there and make everyone feel warm and fuzzy that everything is broadening out. I would like that. It would make me feel warm and fuzzy, but we deal with the market as it comes. And so it looks like the money is still rotating into these mega caps. This one is on, SwingTrader, looks really strong here. So,
and I do have a position in this one myself.
Okay, let me double check to see if I have a direct position in it. I don't have it directly, but I have it via TQQ. But anyways, with this one, what you're looking at to see, does this base breakout from this little very short kind of flat base area stick? Does it continue up? And that would be a positive sign for the market. If we roll in and come under last week's lows, then we know it's a breakout failure, and then we're more concerned about the overall market. Let's take a look at Microsoft as well. That's something that we have on the list right now, and it seems like this is, set up. It's kind of forming a little mini shelf right here, not doing anything wrong. It could wiggle and wobble. It doesn't have to move above the 451 in any material way. We just don't want it really falling down into the 433 range, which would put you back into that last base. So a lot of these we're looking at because we have them on the list, but also for what they mean for the overall market while Nvidia does whatever it's going to do. And then the last one, let's look at Meta, because that one looks like it's set up, and I do have a direct position in this one.
And I have a position in both Microsoft and Meta as well.
Oh, okay. And with this, it looks like it hasn't even broken out of its standard base yet, but we already have it on the list. And so I have high hopes for this one. But if it doesn't work out, and if it pulls back in and undercuts the lows of last week, again, that will be feedback from the market that, we have more of a correction to put in. So we're never trying to predict the market. We're just trying to interpret and assume what would normal be. There's also some movement into the medicals, and we have some medicals that are working, like the REGN has been looking good. That's stalled a little bit today, but it's still in this powerful position. And then the NVO, which I do have a position in that we have on the list, and we were adding to that today, that got some news. So we got lucky a little bit with that news, but we've had it on for some time, and it looks like it wants to continue higher. So we don't want just the software space or the mega cap tech space to be working. We would like other things. So one that you put on today.
I do have both Regeneron and NVO myself as well.
Oh, okay. And then
I'm following along quite a bit with SwingTrader.
Yeah, me too. A lot of what I trade is on SwingTrader. One that I bought after we put it on, this was an idea that you came up with, was Snap, which I really like. And this one reminds me of, at first glance, when you look at the base, it looks terrible. Let's look at it on a weekly basis. And you had that bad break on the left side of the base, and then that run up on the right side. But that's why we study history. And let's take a look at Oracle, and let's go back to 1999. And when I saw this, that one always sticks out in my head because it had a similar type of base, and I didn't trade it back then because I was like, wow, this is really faulty. Where was that one that...
Just give me 1 second. I sure. Accidentally forgot to put...
Oh,
there we go.
Okay, perfect. Was that base right there. And with that, and let's go to it on a daily so we can see that gap down in there. So that's what that one reminds me a lot of. It's not, it's not in the same space. And this is, as you mentioned, it's not 1999 that we're dealing with. So
can't party like it's 1999, right?
Yeah. So we don't have Prince with us anymore to do that. So with this one, that's the type of setup that I'm looking at. Even though the base has problems, we do have this precedent. So now that you have this in your mind, let's go back to the Snap. And this is what you should be doing with market surge all the time, is just using that change date and studying history. So does it mean this is going to work out? No, but if it's, we do have a precedent for it. It's, it's very strong today. That RS line is starting to pick up quite a bit. The only thing is it wiggles and wobbles a lot. So that's why we started off with a 2.5% position rather than something bigger, because it could certainly come down 4 or 5% tomorrow and still look okay. It's not, we wouldn't really know there's anything wrong with it unless it closed underneath today's low. So with that in mind, that's another reason why we're spreading things out, just so we could take bigger risk, because a lot of the reason why we weren't getting the type of traction that I wanted was a lot of the best names we were just skipping because they were just too volatile for a 4% stop, which was my comfort zone. So now we're stretching that out a little bit bigger than that. And to do it, to allow us to do that, we're using the 2.5% and the 5% positions instead of a full size, which is a 10%.
Mm-hmm. So I'm going to go to our mailbag now that we've kind of, oh, you know what? Just one more thing. We talked a little bit about the mega cap rotation. We discussed some of the medical rotation. I also wanted to just hit the financials real quick. XLF, we were noting that this one looked pretty good yesterday. Not so good today. Look, this is something that we faced before. Wasn't so long ago that on May 31st, we thought, oh, this looks like a rotation that's happening to the small caps.
Yeah.
And again, looked great until the next day, and the day after happened, and it just immediately failed. So there have been a number of these rotations that seem like they're happening, and then it's a day, 2 days, and they falter.
That's the frustrating part of the market, is that constant rotation that we're seeing, that it's like, okay, whatever looks good today is going to look bad tomorrow. And whatever looks bad today is going to look good tomorrow. And we were kind of joking about that today, but only half joking, because that's really what we've been dealing with. And so when you're doing these rotations, you want to give them some room, but not too much room. So we did have the FAS on, which was the triple version of this one. And since it wasn't working out and it was the triple, we decided to back away, partially because it wasn't working out, but it really wasn't down that much on us. It was more that for a triple, it was more that we wanted to put the money elsewhere, and we don't want to go too far on margin. Just a few percent on margin I'm fine with, but because we're so spread out, I'm fine with that. If we were concentrated and had like 4 stocks at 25% positions, I wouldn't feel comfortable being that deep in. But given that we're spread out, when this wasn't working, said let's just cut it and we'll put something else on. And if this comes back up, we'll look at it again. We did keep the Goldman Sachs on, which is our way of getting having exposure to this area. So I think the Goldman still looks good, and it's one of the strongest ones in this area. But the RS line isn't moving as quickly as I would like it to move. So we're going to give this a little bit more room. But if we find something a lot better, then we will rotate out of it and use this as what we call a source of funds. So sometimes when we remove something, it's not that it's really doing anything wrong. It's just our expectation was that it was going to go higher. And if it's just going sideways, we'll take that capital and put it into something that we think is set up. And that's just the way I've traded for over a couple decades. And, that's my style, and that's what I like doing.
Mm-hmm. And we also were given a shot at Berkshire. We went with Berkshire B shares. And sorry about the little glitch that happened yesterday. We put it on. Dominic had it all written up, and it wasn't showing up on the current trade. So that's why we sent another alert letting everyone know that the stock was Berkshire. But yeah, it was one of those things. I think that we put it in market surge as BRKB. A lot of other places will do BRK/B. Some will do BRK.B. And I guess there was a little miscommunication between our interface and our data provider. And so it wasn't pulling in the stuff appropriately. So
and some
hopefully
of them do a BRK/B. So
okay. Yeah. So underscore B, there's right. So,
Yeah.
there was just a little glitch there. So sorry about that, folks. And we don't want to give away the complete store here. We've gone over a number of stocks that are on the on the list right now, and I also wanted to address a question that came from our mailbag this week, and that has to do with our current gain loss percentage. Some folks were noting that in our current gain loss percentage, and you know what, I'm going to go ahead and I'm going to stop my share here real quick, just letting Dominic know what I'm doing. I'm going to stop my share, and I'm going to just real quickly share the interface, just to kind of give a sense of what we're talking about here. So here's our SwingTrader product. Over here, the current gain loss percentage. Some folks were saying, well, how come you're not doing this off the average cost? Because we were doing that for a little bit, but then we realized that might be a little bit more confusing for folks. So just so everyone knows, this current gain loss percentage is only going off of our initial entry. And now we do have in the trade setup right here, where that initial entry was 16.25 in the case of Snap here that was put on today. And if this is something that we were adding to, we would also have an average cost here in the trade setup. So you could do the calculation, if you wanted to, but in this case, we are keeping it at the entry because sometimes, look, we have to do a calculation. We have to manually enter it in, and we don't want people wondering, oh, have they entered it in yet? Or, it's changed a little bit now. Is it the new average cost or is it the old average cost? So we're just to keep it consistent. We're going with the entry, but full transparency, we're putting those numbers in there for you. So it's not like we're trying to hide anything. Sometimes it's going to work in our favor. Sometimes it's going to work not in our favor. But that's where it is. And also one other thing that a lot of folks have been asking about is they want to know, you guys have some 3/4 positions, you have some full positions, you have some half positions, you have some quarter positions. It's hard to keep track, and it's a little bit cumbersome to kind of go through all of these. So we wanted to let folks know that, and I don't have a date yet when this is coming out, but we have approved the look of it. So they sent us the designs.
Good, I think.
Yeah. So what we did was we just are going to have on the left-hand side here, where the symbol is, before the symbol, it's going to say what that position size is. And there's a lot of things we want to do, but we're trying to do it kind of a piece at a time because, sometimes these things can, if you make it too complicated, then there's a lot of moving parts to it. And we don't want to do a complete revamp. That would take a lot longer. So we're just trying to do some of these most important, frequently requested things, and get those out there. So you should be seeing shortly, and we'll let you know as soon as we can when, or you just might be surprised one day. But that'll be here on the left-hand side. And one of the things was they were ready to go. I think they were ready to go on the web, but not on the mobile, or maybe vice versa. And we felt like, oh, we should probably do both at the same time, because otherwise people are going to be like, hey, my mobile is broken or my web is broken, so we said, okay, we'll just do them both at the same time to avoid confusion there. So those were 2 questions on the mailbag. I'm just going to repeat this because we did do this on a previous mailbag question in terms of the past trades. Remember that for the past trades, and look, we have all of the numbers there for you in terms of where the ads were, where the trims were, where the final exits were. So those are all there in the past trades. So you could always take a look at those details on any stock that we've put on, the warts and all. But you just have to kind of realize that we have to have a way of being consistent with it. And so what we do is we do adjust for position size. So we have a lot of quarter position sizes. So that means we're going to be whatever, if the gain is 1%, it's going to show that the gain was 1/4%. If the loss was 1%, it's going to show the loss was 1/4%. So we're applying it consistently to both gains and losses. And that's just to kind of make sure that we're trying to communicate that, okay, this is what the risk to our portfolio was, because we don't want to have everything kind of just based on the trade, because sometimes we're making those adjustments and saying, okay, we're going to knock this down 1/4 position because it's got a higher ATR and we don't want to have too much risk to the portfolio. So that's why we're making those adjustments to kind of try and teach that lesson. But again, if you feel uncomfortable with that, it's like, well, that's not what really happened. The numbers are there. you can just go ahead and calculate, take all the ads, and say, okay, here's what their average ad was, or you can even mark it up on the chart. You don't even have to mark it up on the chart. It's marked up for you on the past trades. You just open the past trade and it has that screenshot of what it looked like for any of these past trades. So hopefully people remember that. If you just click on the symbol, it's going to show you all of the things that were happening on that particular trade. So I think that's going to wrap it up for this time around. Any parting thoughts, Mike?
No, I think you did a great job there. And just remember, everyone, that all the decisions that we make them for a reason. They might not always work out, but you should look at them and study them because, again, whether we're reducing something or adding to it, we're wanting this to be an educational service. So you're learning a style of trading, and that is really the more shotgun approach, and then adding to things as they're working. And so make sure that you're taking the time to look at each one, not just like, oh, I got another alert. Do I buy it or not? Just think through, okay, they're putting, something on in this sector. Where is it positioned? Where is everything else on the list? Because there's a lot of thought that the team puts into all these decisions, and we want you all to learn from it. So until next week.
And as a reminder, you don't have to do them all. So there's a lot of ideas out here for you. And if you like some more than others, that's fine. Do the ones that you like and pass on the ones that you don't like.
Or the same thing when we're removing something.
Yeah.
You don't have to. Lots of times, like I said, we're removing something because we might be too heavy in the sector. We see something better. Or like you said, we could have some risk from an ATR situation, something that is very volatile, and we need to remove it just to manage our risk. Feel free to hold on to them. This should be an idea generating service, and use it as such.
Mm-hmm. And then one more thing for those of you that want more of the commentary, don't forget that both of us are panelists on the IBD Live products. You can always get there at investors.com/IBD Live if you haven't taken a trial. As a reminder, Mike just did a great chart school session over the weekend with Charles Harris. They revived this decades old workshop that they used to do, and this was our first time doing it virtually.
We used to do, because you were in the room every single time.
Yeah,
I would not speak unless you were there.
Yeah, so that was really cool to do. So that's something that you can certainly, if you missed it this weekend, something that you can watch. A lot of people gave really positive feedback on what was being said. Really appreciated the value. Look, it was a long one, right? 6 hours.
It was a long one, but it was
6+ hours. But worth it.
I will say that this way it was geared towards position trading.
Yes.
So not swing trading. So it's more the orthodox way of looking at things, trying to hold for a long move and doing it from that standpoint rather than the swing trading standpoint. And yeah, I think it went really well. I was really happy to do it, and it was just fun doing that with Chuck again. So hope that you all check it out.
Yeah, and that if you do purchase it, it is an archived version that you have access to for 3 years. So you can watch it over and over and over again. Well, hey, that's going to wrap it up for us this week. Thanks so much for joining us, and we will see you next week. Take care.